what a difference 24 hours makes. It's a bit of a risk-on mood out there this morning compared to what was the case in trade yesterday. But remember, I think in some conversations actually throughout the trade setup, we were talking about how a lot of people were saying that until that 16,000 to 16,100 band stays intact, we may well be okay. So that's essentially the flow for today's session. Not too much in terms of global news flow, but for the fact that the big development was that there's a bit of a risk on out there. Look at the US markets and look at the shade of green out there. It's a very strong green that happened overnight in the US markets. 3% up for the NASDAQ. Imagine Netflix up about 7.5, or actually maybe double digits. I'm not completely sure about the extent of gains, but a very strong move for Netflix as well after the conversation came around whether they'll recoup all of the lost nearly million subscribers that they lost in the previous quarter in the current quarter because of Stranger Things. And Stranger Things is the show, by the way. So, well, damn good go for the NASDAQ. And that's a bit of a sentiment barometer, right, about what's happening to the value versus growth argument. So here's the thing. These stocks are growth stocks. They are discounted well into the future. But yesterday, they came bouncing back. It could well be a short-lived move, but for now, there is a bit of a risk on. Bitcoin is up northwards of 23,000, if I'm not wrong. So that is doing well, 23,324. Dollar index at about 106. So from 109, the highs of 109 is now down to 106. The US 10-year yield steady at the 3% mark. So all in all, pretty positive news flow and cues out there. The SGX Nifty indicates a start, which is pretty positive as well. How many points? About 180 odd points at 16,523. Keep in mind, I mean, the 200 DMA is at about 16,527. If it breaks that, takes that out and stays above it, then it could well do well. I remember a conversation about 8 or 10 days ago, maybe less than that, with Gautam Shah of Goldilocks when we were at about 16,200, and he was firmly recommending that this is a buy on dips market. July seems like 16,800 could be on the cards, and FMCG will lead the rally. For now, that is turning out to be true. Let's see if that stays. Now, what's the trade setup for the day? Yesterday we spoke about how the buy on dip strategy is in place, and it's working for traders and likely to reward today as well if you bought the dip. I'm not saying that it was necessarily the right move in trade yesterday, but if you believed in the buy and dip strategy, then today it is at least working out. So it certainly, there's proof of the pudding is in the eating, and there's a bit of evidence there. Oil and gas moves and global positivity likely to keep markets buoyant throughout the day. I have not mentioned FMCG out there, but HUL could well trigger the further up move in FMCG. The only reason why I'm a bit circumspect out there is because there's a bit of a rally that we've put in behind us already in the FMCG names over the last few days. And a global pullback, by that I mean is that if the markets move further higher, may lead to even IT participating in the short term. I mean, and why do I say this is because look at the Bank of America Global Fund Manager Survey. The July BOFA Fund Manager Survey shows dire level of investor pessimism. Expectations for global growth and profits are all-time lows, and cash levels are the highest since 9/11, and equity allocation is the lowest since Lehman. So the BOFA bull and bear indicator remains max bearish, and they say that in H2 fundamentals are poor, but sentiment says that the stocks and credit will rally in the coming weeks. So they are talking about this from a global perspective because of the fact that sentiment is so low that the risk assets might make a bit of a comeback. Now, will that happen? Who knows? BOFA believes it will. For now, it seems like there could be some bit of merit in their argument, and the market is showing signs of that. Let's see if that happens. Interesting day for results. From amongst the Nifty names, there is only Wipro, but a bunch of interesting mid-cap names. See it. Interesting in more ways than one. Gland Pharma is one of the few which was anticipated in the pharma pack to post a good set of numbers. Let's see if they do. Havells would be interesting because cooling solutions companies likely would have had a strong quarter, and Havells would not be any different. There'll be view on how IndusInd Bank does after what HDFC Bank has done. Syngene, they have recently won some very interesting orders, and therefore that stock remains in focus. And lastly, Wipro. After what we've seen TCS and HCL take dish out, and Infosys coming out on Sunday, it is imperative to see for IT reversal to happen that Wipro at least posts some bit of solidness. Let's see if that were to happen or not. But the focus is not really about what some of these companies come out with results, because it's a very news heavy day. The focus is on companies that are in news this morning. Start off with the big move that happened overnight, actually post midnight, if you will, if I'm not wrong. But India has cut the windfall taxes on fuel exports as global prices have fallen. Levy on gasoline exports have been removed. Diesel jet fuel taxes have been cut, which has more implication for a bunch of other stocks too. And tax on crude oil produced from local fields has been slashed by 27%. Now, viewers, remember, because of this move, uh, not only Reliance, but ONGC and Oil India in particular had been taken to the cleaners. Now, do they regain all of their lost glory? No, because one, that people would believe that the government flip flop or policy intervention in these stocks will continue to happen. So it's a very difficult trade to make from a post the gap up today. But will there be a gap up? Most certainly there will be. ONGC, I believe, is a principal beneficiary. All India will have a big move as well. Now, the key is with Reliance, wherein I'm here, dichotomous moves, views. The stock will start off higher, for sure. I have no doubts on that. The point about Reliance, viewers, is that I mean, the brief analysis, right? The earlier the impact on GRMs was expected to be in the range of $6 to $13 per barrel, as per analysts. Now, with the exemption on SEZ and lower tax, the impact is now in the range of 1 to 6. But there's been a sharp drop in GRMs, and therefore I don't quite know how much of those gains can Reliance keep if Reliance starts with a big gap up. But I have no doubts that there is, in principle, a benefit for Reliance, and even that will start well. But between Reliance versus ONGC, I believe ONGC is a bigger beneficiary and therefore might have a bigger delta today. So watch out for these three, and of course all the other allied movers in the oil and gas space or the beneficiaries thereof. HUL is the other big one. The only point is it's had a bit of a rally behind it, but look at those numbers. Revenue is up 6%, higher than Bloomberg estimates. EBITDA at 3,402, the expectations were 3,122 crores. So EBITDA margin is actually marginally lower than the corresponding quarter last year, right? 23.3 versus 24%, and it's just in line with estimates. But the higher revenue led to a higher EBITDA number as well. So the EBITDA number is higher, margins are marginally lower. The management has spoken about how there could be some price hikes and some margin pressures in the second quarter as well. But the reported numbers are strong. Net profit at 2,381 versus 2,206. It's a big beat. Morgan Stanley's gone out and raised the target price as well to 2,230 from what it was. And they're saying that the earnings beat remains. Inflationary pressures, however, will continue to hurt margins in Q2. But not, easing inflation will support margins. And they're using the term could. I'm sure it will support margins, but probably before Q3. They believe that market developments will continue to weigh in on the margins going ahead. I believe that HUL, ceteris paribus, should have a move. The only point is that, as I said, it's had a very sparkling rally before these results. So let's wait and watch if there is more in store. But HUL remains a stock in focus, and which is why FMCG remains a pack in focus as we've been talking. ICICI Lombard, viewers, you remember Motilal Oswal came out with a note recently wherein they upped the target price with a return of about 20% odd. Now, look at these numbers. Well, these are numbers, right? Revenues at 3,978. The expectations were 3,747. So beat there. EBITDA 317 versus 54 crores. Again, a beat, and net profit at 349, marginally lower than what the estimates were. But I think in insurance companies, you look at the kind of beat that is coming in the EBITDA and whether they've delivered on the revenue front. I think it has. On a positive day, no reason for ICICI Lombard to have a big negative. So watch out for this one. Ambuja, most people say it's in line with estimates. Keep in mind, the EBITDA number was a disappointment to my mind. Revenues are up. PAT is higher because there's also another income. So ignore the PAT compared to Bloomberg estimates being higher. The EBITDA number is much, much lower. EBITDA margin number is much, much lower. Therein lies the problem. Brokerages, Ambuja, Credit Suisse has cut it to neutral with the target price of 335, or Citi has cut it to a sell with a target price of 340 rupees per share. BofA actually has gone out and increased the target price on Ambuja Cement. So there is a bit of an anomaly there. BofA has a target price of 410. It's cut, but their target price of 410 because they believe that the volume growth remains healthy. and while they are baking in a slower recovery on the cost front, they still have a higher target price than what is currently. So difficult to say. Keep in mind, Ambuja also has the trigger of at the pricing at which it gets bought into. So therefore, all of those factors remain in place for Ambuja. But net, the numbers I believe could have been a bit better than estimated, and they are not. ACC Ambuja, both of them have missed out on that front. Rallis was a bit of a howler, if you will, not a howler really, but a disappointment. Revenue is up 16%, but EBITDA down, EBITDA margin down, net profit down 18%. And the disappointments for Rallis continue. That's the pain point really, and which is why you might see this stock reacting slightly negatively today. Hudson Agro, I'm undecided. It's a stock largely with, you could argue fairly fairly rich valuations in general, but let's wait and watch. I mean, margins are hit big time, and a TTMP of what, 90 times. That's an expensive stock, but let's wait and watch. Share India Securities, please remember it's a very liquid stock, but after having a fairly solid FY22, they've come out with you would argue a fairly decent set of numbers. EBIT margins have contracted a bit, but on the whole, a 63% jump in revenue and a 75% jump in PAT is something that you would probably take with both hands. So not a bad quarter. If the stock reacts, you know why. Some other stocks, Vedanta, they approved a second interim dividend of 19.5 rupees per equity share. So that one also could be in focus today. Some other stocks include a Grasim. The company plans for trading and marketing of building material through a B2B e-commerce platform with an investment of 2,000 crores over 5 years. Now, could this be a challenge for some of the other platform players? Who knows? I mean, IndiaMart is fairly solid in this space. Maybe it has a negative reaction. I don't quite know. If it does, then you know why. This could be a reason. Krishna Diagnostics, they won a 10-year tender from the government of Rajasthan for installation and maintenance of a CT scan center. I don't have a handle on what's the size of this. I'm bringing it to you so that you know that there is a development like this. But honestly, viewers, I don't know how important this is for Krishna because there are no numbers involved here. Vodafone Idea will consider issue of equity shares or warrants convertible into equity shares up to 42.76 crore shares to the promoter entity on July 22nd. It keeps on diluting, and therefore that's the problem there. And Trident, I just wanted to bring this clarity here, viewers, on Trident, because the news flow in a lot of places is that the companies shut operations due to some protests. The protests are not from internal workers, but from the Punjab Morcha protests, which are being done by farmers. And it's been done for 4 days, from July 20th to 21st, or actually for 2 days or 3 days, something like that. And they will give an update further. So that's the limited piece here. It's not a internal protest by workers, but because of the farmer protests that are happening in Punjab, as a result of which they have taken this as a precautionary measure. So keep that at the back of your mind. Raymond might react. There is some note around from Money Life, so maybe that stock is a reaction, but I haven't been able to verify the claims done by the report, so I'm not in a position to be able to talk about it freely, about it being a key mover necessarily or no, but it may move on the back of a Money Life note, so keep that in mind. But frankly, the game today is oil and gas, ONGC in particular, but maybe Reliance and Oil India too. HUL, by virtue of the strong numbers that they have put out, and a couple of other principal stock movers on the back of their numbers. So Hudson expensive, margins hit. Similarly for Rallis, not a good set of numbers. Share India, decent set of numbers, and a bunch of stocks that will come out with numbers on a day, which looks like very promising from a market's perspective. So good start to the trading day expected. Likely that the day will stay well because the US stock futures are also doing well. And if there's a bit of a risk on trade, then it kind of lasts for a few days. So you never know. This might well continue as well. Good day to be a bull if you were one. Be careful with initiating fresh long positions unless you are completely confident about the trading pattern. Thanks so much for tuning into the trade setup. Have a solid day ahead.